Everything's on an app.
Yeah.
And then everything's on Amazon. If Amazon AWS shuts down, we can't do anything. We can't even function.
I can't open my garage door.
Dude, same with me, Spencer. This new house, everything, it's like a smart home, and it's not so smart. There's always something.
Maybe you're just not smart enough for the smart home.
Like right now, it's just
Strazza needs like a dumb home.
By the way, I just want to say I had this thesis like 10 years ago that like Google and Amazon and Apple were going to build entire subdivisions where the software, they're going to partner with like Lennar and the home builders, and the software will be built into the house. So you can move into like an Apple house or an Amazon house or a Google house, right? I said that like a decade ago. I'm just throwing that out there again.
I'm sure some home builders are already doing some things.
Yeah.
Hey, what do you guys think about the agentic Siri? Hearing about this?
Yeah. I haven't seen much about it yet, so I don't have an opinion.
So high level, the new narrative is that Apple, after all these years of spending close to no money, while Amazon and Google and everybody else trip all over themselves, spend all their free cash flow building out their AI capabilities, that Apple's just going to step in, and Siri is going to be able to access all the apps on her phone, and you just tell her what to do, and she's like your personal assistant.
Dude.
And that's going to be like game, set, match.
Dude, those Apple guys, they're smart cookies over there.
Yeah, right? Makes sense.
All right.
Who's in a better position to do it?
Dude, I went to an investor club meeting yesterday.
Mm-hmm.
I tried to like keep it. I try to keep it DL, kind of mind my own business and just listen. You know.
No, you didn't. You were doing the most talking.
No, I swear to God, I went in there. I was a newcomer, and I was just minding my own business. And I went with one of my buddies, and he kind of called me out. And he's like, "Oh, whatever," But I just kept my mouth shut, and that's hard for me, right? But I'm like, this is not the morning show. This is somebody else's meeting. I'm just attending. Shut the fuck up and listen. Like that was. And so I did. But then they were calling on me. So what am I gonna do? Not tell them what I think?
What'd you say?
I said what we were talking about, they were talking about the dispersion. As it turns out, the guy leading the meeting was actually an economist. He was an economist academic.
There you go.
I'm like, here we go, right? But you know what, this dude, it made me so happy. He starts out the meeting being like, listen, he starts talking about the dispersion. He didn't use that word, but he was talking about kind of like there's winners and losers to start the year. I'm like, yeah, great. With you, brother. And then he's like, I'm not an efficient markets guy. All my colleagues are. I'm more of a sentiment guy. I'm like, what? Did he just say that? I was like, no. I was like, oh, my man right here. My man.
JC made a friend immediately.
Dude, I'm like, dude, I love this guy. He's already ripping on his colleagues. I haven't even introduced myself yet. It's great. And so, lovely. Just individual investors, financial advisor, kind of just people interested in the market, a recent retired doctor, semi-retired physician, so they got a couple bucks,
Right.
It was lovely, and I did it, and not for nothing, I did a good job of keeping my mouth shut.
Did you learn anything? What was the vibe like? What was everybody else saying?
They thought I was crazy. Started asking me about Bitcoin and crypto, and I'm the only person there who does any of this stuff, so they think I'm like some kind of crypto expert. I'm like, guys, I'm the furthest thing from it. I don't know anything about this stuff. They're like, well, you sure seem to. Everything's relative, I suppose, right?
Yeah. Now tell us what Elon said.
Elon?
Oh, he wasn't there?
Elon Musk?
He wasn't there? He wasn't at the meeting?
No, bro. This is an exclusive investor club. Not anybody could just join.
Got it. Right.
Yeah.
Okay.
You have to have like a personal invite.
All right.
Anyway,
cool.
I've never been to one of those before, so I just thought that was cool.
All right, busy day for us here. A lot going on. We're gonna have Kenny Glick stop by in a few. We'll have Jeff Mackey stop by to tell us about Walmart earnings, which are happening like now as we speak. Sean will be here. Much to do, not much time to do it in. So let's roll. And we're back.
Individual investors, more bears than bulls.
Finally.
Just came out this morning. This is the first time that the American Association of Individual Investors, which I believe is slide 5, the first time since Thanksgiving. So this data came out this morning, and there are more bears than bulls. Meanwhile, if you go to the slide right above that, the New York Stock Exchange advanced decline, new all-time high yesterday. So I asked Mr. Steve Strazza, what is it that all these individual investors are so scared about, to the point where there are more of them that are bearish the S&P 500 over the next 6 months than there are bullish ones? What do you think that is?
I'm surprised it took so long for that to flip. What do you mean? Why do I think
it was pretty close last week? Remember, it was just a few. It was like a nose hair away from flipping bearish, and did this time.
Yeah, most people's portfolios are probably under pressure. Like, passive investors are not doing well this year, right? So we could sit here all we want and talk about how good material stocks are doing, but we're really doing a disservice to the general vibe for the investing public, because they don't own them.
Who gives a shit about the general public? Like, this, tell it like it is. Like, so all these people are loaded up in all these mega cap tech stocks. We do talk about it all the time, right? We talk about it all the time.
Well,
and so those people's problems are not our problems.
Well, it's a question of what's the right thing to do, right? Because
as an investor or on the morning show?
No, as an investor, right? Like, are you supposed to sell your Microsoft and Nvidia and load into Cliffs Natural? Like, what's your time frame? Does that really make sense for most people? For most people, you probably just are best off sitting here wearing this little drawdown, but staying in the growth stuff. So I think a lot of people are going through that, and it stinks.
So here's what's really interesting, Strazza, and we'll get into the state of the markets now. Here's what's really interesting. There's a difference between tech stocks falling and tech stocks going sideways. And I think we could all agree here that since September, tech stocks have gone sideways, right? Now, the S&P 500 has gone nowhere during this period, right? The day that technology peaked is the day the S&P 500 peaked, and has been stuck below that the whole time, right? Great. Look at technology relative to the S&P 500, carving out what could potentially be a massive top on a relative basis. But as we know very well, time and time again, the market proves that it's probably not that. And we're just at the lower end of the range here on a relative basis. And so a couple of stats for you guys that I think are really important, because the question becomes, does tech break down here, right, Strazza, and drag the market with it? Or is this just a consolidation? We've seen new leaders, and tech is just having its, break, well-deserved, by the way, right? And it's just having its break, and you're seeing that unwind in the positioning. And so to help me answer that question, because I don't know what's going to happen, nobody does, we want to weigh the evidence. And so small cap technology is at all-time highs. Mid-cap technology, all-time highs yesterday. Mid-cap technology. So is it a technology problem per se? Yeah. Or is it mega cap technology, right? And mega cap growth more specifically versus a technology problem? AI is killing all these people. Yeah, I don't know. Large cap, small cap tech and mid cap tech are both at all-time highs. By the way, hold on. Large cap tech on an equally weighted basis is at all-time highs. The equally weighted semiconductors, all-time highs. Market cap weighted semis relative to the S&P 500, all-time highs.
You're cherry picking a little bit, and you're not telling the full story.
Cherry picking a little bit. I just rattled off fucking 10 things.
Small cap tech. The truth about small cap tech is that PSCT is at the same exact place it was in November right now. Look at the chart. They haven't gone anywhere. So I think it's a broad tech growth.
Mid cap tech.
I don't have access to mid cap tech on TC2000, so you'll have to tell me.
I don't know what a TC2000 is, but what are you saying? Since when? Since November?
Yeah, it's the same place it was.
Yeah, this thing's been making all-time highs every week all year. So
PSCT we're talking about?
I'm sorry?
PSCT.
I am talking about the S&P 400 mid-cap index information technology.
Yeah. Okay.
Cherry picking, equally weighted tech, all-time highs. Small cap tech, all-time highs. Semis, equally weighted, all-time highs. Semis cap weighted relative to the S&P, all-time highs. Guys, in the chat, is that cherry picking?
Equal weight semis, same place they were in October. XSD.
Just
right? Like you could say all-time high, but if you look at the chart, it's the same place it was 4 months ago, is the truth.
You're talking about small cap tech.
I'm talking about XSD too.
Oh, okay, fine. Yeah, but it's holding in there pretty freaking great. Like if the market's about to fall apart, would that be happening? Like, all I'm saying is I'm weighing the evidence of technology, and there just seems to be a lot of interesting sort of scenarios. I've got one for you. This is a good one, Strazza.
I think you want to buy the hell out of technology stocks right now.
I want to finish this conversation, but I want
for that reason. Because of the fact that they have gone nowhere, they've been consolidating constructively, which I think is kind of the point that you're making, for many months now, while the rest of the market has continued to do very well. I think if you're looking for where the next rotational tailwind is going to be, don't look any further than tech. You don't need to.
Throw up the slide 2. So this is great data here from Michael Cantro. He works with our good friend Craig Johnson over at Piper Sandler is what it's called now. It used to be Piper Jaffray, now Piper Sandler over in Minnesota. And shout out Minnesota. I've only been in Minnesota for like 2 hours once in my entire life. I got it on the plane, off the plane, had a meeting, got back on the plane and left. That's my experience in Minnesota, which is a bummer. I'd like to experience that a little bit more, maybe. So what are we seeing? We're seeing that how the Mag 7 impacts the overall market, right? Which I think is really fascinating. This is a great look here, Michael Cantro. So what are we looking at on the left? If the basket of the Mag 7, which is $20 trillion, it's not nothing. I'll be the first to tell you if something is stupid and irrelevant. Like this private equity fund that just is blowing up, that they halted money coming out last night. It's like $1 billion, $1.5 billion. So it's not a big deal. This is 20 trillion.
This is exactly what's been going on. This little table here shows the exact environment that we're in, right?
So a 5% decline in the Mag 7, a 10% decline. What does that mean to the S&P 500, right? So 5% decline in the Mag 7 is 1.8% to the downside in the S&P. A 10% decline is 3.5%, right? And then so on the right, you're able to see what the remainder of the 493 stocks in the S&P 500 would have to do in order to maintain the S&P 500 being flat despite a drawdown in the Mag 7. I just thought this was a really interesting look. I had never calculated this before. I don't know that I've ever seen it before. The numbers are pretty much what I imagined. I would say the Mag 7 has less impact on the S&P 500 than I thought, personally.
It's a good study.
It is a good study. I thought this was good. Shout out, Mike Cantro.
Harmander, such a diplomat. Thanks, buddy.
All right, let's do State of the Markets. Let's roll.
Okay.
All right, ladies and gentlemen, we've got the Dow down 1/3%, 160 handles, 49,560. S&P down 1/3%, 6869, down 24 handles. NASDAQ 100 down 0.5%, leading the way lower today, 24,840, down 118 points. 30-year bond futures down 0.25%, 117.5. Crude oil up another 2%, 66.5, up $1.40 today for crude oil. Copper down 1.6%, $5.70. Gold flat this morning, slightly above $5,000 an ounce. Silver up 0.75%, 70. What is it? 78 and change. Is that really 78? 78 and change. Shout out silver. With the VIX still above 20, up slightly this morning over in funny money land. You got Bitcoin just under 66,000, down 500. Ethereum 1916, down 40 points. That's 2% to the downside. Solana just below 80, down 2% with the total crypto market cap. Mr. Spencer Israel, 2.25 trillion. 2.25 trillion. What stands out from this morning's futures?
Not a whole lot. Actually, that's not true. I guess we're going to war, apparently, in the Middle East.
Another one?
Yeah. The odds of war doubled and are now over 50%.
I saw a stat. I'm gonna butcher it, but
I don't understand why
we have our heaviest military presence in the Middle East since 2003. Apparently, that's what I saw this morning. So
why wouldn't this war be a nothing burger like the others?
Well, it's interesting. It is interesting that the defense stocks just happen to fall within like the best sector right now, right? Which is industrials. So
Well, they've been driving a lot of that.
Yes, but they're not the only ones, right?
No,
It's been a pretty broad-based industrials rally. So I think it's just a kind of a funny coincidence. Not that war is funny, but that if you wanted to like do the war trade, it's already been going, right?
Dude, the war trade. We're always at war. There's always a new war.
There is no war.
Yeah, some shit blew up in the Middle East. I can't believe it. Oh, there's a bunch of angry people in the Middle East. I can't believe it. We just live our lives as market participants knowing that shit is always going to happen. The market knows that.
There's never a war trade.
What?
Yeah, there's nothing there. It's a waste of time.
I don't know.
Completely.
Completely.
And again,
have you seen? I don't know.
I'm not. I want to make sure that everybody understands. Like, I'm sympathetic to the people involved in all these wars. It's not like it's not anything to laugh about.
Obviously,
we're looking at it from the perspective of market participants, specifically as traders trying to make money in the market, not any other stuff. Specifically as traders, what else is new? Turmoil in the Middle East. I can't believe it.
I don't know. Have you seen Lockheed the past couple months?
Dude, shout out to Israel.
Had a big dividend there.
Shout out Israel, new all-time highs again for the Tel Aviv index, and then the Tel Aviv 125 index, and then also the EIS, which is the Israel ETF. Dude,
JC, I brought that up at Thanksgiving like 2 years ago. We're talking about Israel
at Thanksgiving.
We're talking about Israel, and I was like, the Israeli stock market that did not go over well. Let me tell you.
And then so I'm interested. Why? Tell me why. Why?
No, people were talking about like the violence in Gaza, and here I was like, by the way, the Israeli stock market is doing really well. Nobody cares.
But is anybody in your family into stocks at all?
No, but not like that. No one in my life is talking to me about Israeli.
How religious on a scale of 1 to 10 is your family?
3.
Okay.
Yeah. So. It didn't go over well. Anyway, the point I'm making. We're getting distracted.
That's bullish, right?
No, this is 2 years ago. We're getting distracted. Lockheed is looking great. Raytheon looking great. NOC. I haven't looked at it, but it's probably looking pretty good too, right? So
how long until we're calling this thing the Strait of America?
Looking great. NOC, all of them looking great right now.
Which strait? The Hormuz?
Yeah. Is that going to be the Strait of America?
Shout out to the Strait of Hormuz. This just in, if you could throw up slide 2, according to betting markets, the odds of Jesus Christ returning this year have surpassed Kamala Harris's chances of winning the next election. Yeah. Well, this year, we're halfway through February.
Okay, I have a question about this because I've seen this. I've seen this circulating, and I'm really glad you brought it up. Basically, you can buy dollars for like 94, 95 cents. That can't be. In other words, if you bet on Jesus Christ not coming back, you actually get paid on that? Like,
yeah, can we sell calls on Jesus Christ coming?
No, but
because we can just collect all the money, and then if he shows up, it's like, well, what do we need money for? Jesus is back. Let's go. Let's make some wine out of all this water we got.
You want to hear something even crazier?
Why wouldn't everyone do this? Is it because like basically it's just like the basic risk-free rate that you would earn? Like, is that why more people wouldn't do this? It's just not enough. Like, I don't understand how the odds are what they are here.
You want to hear something even crazier? Is that there have been several ETFs filed to securitize the betting markets. So betting markets
that I'm not surprised about. But if we can sell naked calls on Jesus Christ returning,
that's what I'm saying.
That's the trade.
That's gonna happen.
Because I don't know if Jesus is coming.
They're
back
securitizing
or not,
this stuff. It's coming.
But think about if he does come and you lose the bet and you get wiped out. Who gives a shit? Jesus is back. Let's go. Right? Am I wrong? Like, that's the trade. Right?
Yeah, I guess so.
If Jesus comes back, you don't need money anymore. Like, we're good.
This stuff is coming to a brokerage account near you very soon. So,
dude, fantastic.
Keep that in mind.
Here's another interesting one. Throw up slide 7. So when we talk about retail investors this morning coming out saying more bears than bulls over the next 6 months for the S&P 500, right? It's like, well, the retail investors are scared because they're all junked up in all this tech and they're scared shitless that softwares, this is the end and the whole thing, right? Institutions last week sold at a record amount. This one, shout out to our friend Macro Charts. Can we get Macro on the show, Spencer? Get Macro on the show. He'll be anonymous. We'll put like an avatar over him, right? Yeah, bring him out. He's really great. You guys know I don't give a shit what anybody thinks. I think everybody's work out there is subpar to what we do here. But there's a few guys that I actually do really love their work, and the Macro Charts is definitely one of them. Ari Wald's another one. Todd Sohn, like, you know, some of our guests, you guys know them. But Macro definitely on that list. Just pointing out here, Bank of America clients, the institutional clients in particular, historic outflows, aggressively net selling equities here. So really interesting.
What equities? This is total market?
Yep, stocks, U.S. equities in particular. So you know the names, right?
Yeah, I've heard of them.
So my point here is that it's not so much that they're right or wrong or retail or institutional. Is that the retail investors and the institutions are in the same shit, man. They're doing the same things. That's what I'm saying. How do you feel about that?
I'm okay with it.
I love that. Yeah,
I'm okay with it. Yeah.
Can you throw up slide 8?
You don't want to. Okay.
All right. After slide 8, Strazza.
No, this is great. This is great because, you know, you got to have fun in life. And I'm not hating on Ray Dalio. I give Dalio a lot of credit. I'm a big Holy Grail guy. So this is not a knock on Dalio. This is just funny.
Dude,
Ray Dalio is the Greta Thunberg for people who wear Patagonia vests.
I don't know what that means. And
that's quality. That is quality commentary there on Overheard on Wall Street.
What do you like about Ray Dalio, please? That's what I want to know.
What do I like? I like his all the diversification, Holy Grail stuff.
Oh, yeah?
Yeah.
Uh-huh.
I've never met the guy personally, so I couldn't tell you anything about him.
Yeah, you probably won't.
I don't know what this
He doesn't really meet people, but okay. He sucks, dude. The bottom line about Ray Dalio is he's literally the worst. He's the worst in this business. He's the #1 biggest offender, biggest asshole.
Wow.
Yeah.
Tell me how you really feel.
There's nothing good about this man. And working at Bridgewater,
I'm sure there's something good about him.
Is a prison. Talk to employees of this firm.
Wow. All right.
Wait, Steve, doesn't he not run the firm anymore?
No, they got rid of him because the radical transparency. I don't think he does anything over there anymore. I don't think he has done much there for 20 years.
Okay.
It's like one of those like creepy churches that Katie Holmes was a part of, like one of those kind of things.
It's insane. Documentaries will be made about this in the future, what these employees go through and some of their like internal policies and just the overall culture there. That I don't think there's any company like it ever. And the fact that they've gotten away with it for so long is mind-blowing.
Wow. All right.
I look forward to that very much. I will watch it.
They pay people to shut up about it.
Okay.
Can we
I can say whatever I want because I worked at SAC Capital, which wasn't like that.
There you go. Tell me. Yeah. I mean, listen, I've never been accused of not telling it like it is, so I appreciate that. Strazza.
Wow.
Are we gonna do the beat? What is it? What is it called? What does it Strazza say?
No, Strazza has a chart.
Hold on, Wavy. The guy is not right. The market's at new highs. The world is not breaking down. The world order is there's nothing right about anything.
By the way, the funniest part of Ray Dalio, going on every major network on TV that'll have him telling everybody the world's coming to an end is when you look at his portfolio and he's been buying semiconductor stocks and AI companies.
Right. I mean, they run like 50 different strategies over there anyway, so they're not just doing one thing. They're not making like one big oversized bet on like his end of the world thesis at all. They never have. So like it's crazy because you're absolutely right, JC. They're doing one thing with the Bridgewater money, and then he's saying all these other crazy things. It's like bananas. It's been going on forever, by the way.
All right,
it's not new.
Strazza wants to talk about PE valuations.
Oh yeah.
Yeah. Chart on.
Valuations. The question here is a simple one. Valuations. Do they matter?
The general consensus seems to be in the short. JC's gone. The general consensus seems to be day to day, no, in the long run, eventually, right? That seems to be the politically correct way to answer that question. How did I do?
What this chart is simply showing, you got the 1 year, 1 year returns on the left hand side, and then the 5 year.
Oh, wait a minute. Come back, Steve. There we go.
Am I back?
Yes, you're back.
Am I back?
Yep.
See what I'm talking about? This freaking smart home. And then you got the 5 year returns here on the right. So just look over there. There's a clear relationship here, right? Where when valuations are low and stocks are cheap, forward returns are higher, right? You can't deny this. Can you deny it, Spencer?
Sorry, I'm just trying to like internalize what this is saying.
Okay.
Okay, so we have 1 year on the left, 5 year on the right. Got it. Okay. All right.
Next one, the one that I've marked up with my little green circle. Okay. So why is it that so many investors seem to think that's crazy? US will never stop outperforming. We'll never stop seeing these types of returns. It's because we have this cluster, right, of outliers in recent history where the S&P 500 has continued to deliver really, really solid performance despite coming in at a very high valuation. See the little green circle?
Yeah.
Outlier. That's all recent history, those data points there. So it's been different recently. So then the question for investors is, does it stay different? Is this some sort of statistical anomaly? Does it continue? Or is this just the end? And then we go back to kind of trend here, where when you come in at 20, 23 times earnings, you're not going to see much in terms of forward returns. That's the biggest question for investors who are trying to invest and position themselves with long-term portfolios.
Yeah, I mean, isn't the conventional wisdom that the higher the multiple today, the lower the forward returns tomorrow, right? I mean, that's like traditionally how these are thought about. But
what the chart shows too.
Wasn't the long term average multiple for the S&P like 15, and then it was 20.
Well, I'm glad that you asked, because we have
and now it's at 22. So
throw up the PE chart for Spencer. So why is it that the US has absolutely crushed for the past 15 years, right, in terms of like relative return versus stocks around the world? Well, look at where we came from. Look at the valuation trough where we started 15, 20 years ago.
Yeah. So, okay, the 30-year average is 17. Yeah, that's okay. That sounds right. I mean, I'm not questioning this. I'm just, so 17 is your 30-year average. And then slowly but surely we got to 20. Now we're at 22. But this is like the ultimate question, isn't it? Does this mean we can expect lower returns going forward?
The ultimate question is like, are things different now? Like, did this relationship just somehow change forever, and stocks with really high multiples can do really well? I don't think it lasts. So I think there does need to be some sort of valuation reset. What the biggest bulls on the street would come on and say to this is, we're going through an AI revolution. It's a technological revolution. It's being driven by the United States, right? So that is deserving of multiple expansion and premium valuations. Yeah. So you can argue this both ways, I guess, is kind of my point. But it's just something that I think is really important to be aware of. And Stephen Weitzel is going to come join us, discuss this more, I guess, Monday. Yep, and I think he's also going to go through a lot of these charts that we both found very interesting on his show today at 10 o'clock. So don't miss that.
Yep. Okay. Let's bring on Kenny real fast. And we got Jeff Mackey, who is just in from the Walmart earnings call. So nice. Let's talk to Kenny first, and then we're bringing Jeff out. And then Sean. Busy day.
JC, we're done talking about fundamentals and valuations. JC, somebody text them.
You can come back now.
JC, you come. It's safe.
It's been a long time coming. They ain't come from my club, they tug it. Putting up numbers, 99 pounds, and I still kept it 100. Hold up. Yeah.
Oh, Kenny Glick, thank you so much for being here and saving me from this conversation about PE ratios. What the fuck show is this?
We talk about EBITDA. That's all, folks.
Dude.
Yes.
Listen, I like. I'm into the. Listen, I do some fundamental analysis on my own businesses. I like operating leverage. That's a good one. Operating leverage. How about this one, Strazza?
Yeah,
Margin contribution. How you doing? You hear these words?
Can we talk about dollar debasement? I just like saying
Margin
that.
contribution. How you doing?
How you
How
doing?
you doing, CFAs?
Kenny, that doesn't mean that you keep dollars in your basement. I just want to be clear.
I debased my dollars. Yes.
Okay. I want to make sure we're all on the same page there.
Hey, I like that. Kenny Glick in the house. I don't know if the I'm looking at the NASDAQ. It looks red. Is that right?
Yeah, yeah. But still virtually impossible to stay short throughout the day. But that
Tell me why.
It's just there's an underlying bid to this market that even though, and you know, the perfect example, look at this Alcoa chart over the last 3 weeks. Alcoa has been a great dip buyer for the last, let's go since the earnings report, right? So here's 20 days. Let me show it to you on a yearly chart. You'll see it. It's in a downtrend, but every dip keeps getting bought and it rips back in your face. So the dip buying is working, even though it's in a very subtle downtrend. It's impossible to stay short. So Alcoa is like the microcosm of the Qs. You can get a short opportunity and make money on the short finally, but you cannot stay short. So the idea of, shorting is short-lived and you're going to die is still out there. I do think inevitably the consolidation is going to lead to a breakdown, which inevitably will lead to a breakout again, but it's very difficult to stay short. And that leads you to this trade that we already did on the Walmart. Let's go, people. I mean, you got Walmart gap down in a bull market. This thing was under VWAP pretty much the whole morning. You got a nice break, and you're sitting here with $1 risk to buy Walmart. And as we're on it live on TikTok, crushing this thing with our TikTok friends, and now they all know that we know what we're doing. That was their first trade with us. Congratulations, everybody that took this trade. Blue line, orange line works again. And if you were up a little bit earlier, if you're going to short stocks, it has to look like this. Give me something that's gapped up like DoorDash, breaks VWAP, breaks the ranges, and you're just trading range to range. And some of us got paid. I didn't get a good entry, so I didn't do it. And again, we're going to get another shot at the DoorDash short. But this is, I've been saying this for quite some time. This is the best trading that has ever been.
Wait, Kenny, I have a question. So
Yes.
I know that those red lines are like they're highs and lows, but does it matter where those highs and lows are from? If it's yesterday or last week or?
Well, that's yeah. So basically, again, somebody once said to me, "What do you care about pre-market and aftermarket?" Pre-market and aftermarket sets the ranges. So these red lines that I'm drawing on the chart, by the way, this is what I'm going to teach you guys on Saturday. So you got the blue and the orange, which is today's VWAP in multiple time frame. The red lines are just your pivot points, right? So I look for the high candles to meet low candles and the exact price. When I talk about price, I'm talking about like exact prices. If it's 127.16 and it holds 127.16, that's where I draw my line at that price. And you'll see how the stock will ebb and flow to these prices. We just call it a price of significance. If it pulled back to there once before, chances are it's going to pull back there again. And then you get new faux show bros and VWAP breaks. So once you draw the roadmap, VWAP tells you what side of the divider to be on, and you better not swerve out of the lane or you're going to get crushed by the oncoming traffic. And that's kind of what trading is all about. And so you draw that roadmap, then you got the VWAP telling you what direction to be going into, right? So again, if you guys have seen that movie, you're going the wrong way. How does he know where we're going?
Planes, trains.
Very good. All right. Now you can be friends.
Kenny loves it when you recognize his movie references.
I do.
Yeah.
He really does. He does really enjoy that.
I do. You know what it is? Because I'm around my wife. She's like, how do you remember all that stuff? I'm like, because that's what men do.
I was going to say, I think that's what wives do. My wife, I say things that goes right over her head, and then you can hear like her brother in the kitchen, like laughing.
Yeah. It's what men do. We have a gene that we just remember dumb shit.
That's true. That's totally true.
Especially from movies and TV. But I mean, I could quote everyone. How many times have we all seen Godfather? I'm going on. I got to be 1,000 at this point, right? I mean, every line. It's crazy. But
crazy.
That's.
Are we walking through the charts, Kenny?
Crazy. Kind of. You think Walken should have been in Godfather, or at least 2 or 3, maybe an uncle or something. I'll be damned. But listen, this is like I said, it is the greatest trading ever because the opportunities are so vast. You have every day there's somebody reporting earnings that has some decent volume, and then you got Carvana, which, ladies and gentlemen, I hope you bought it already. I'm looking for bloody revenge on this stock. Normally, I don't short stocks that have already gotten slammed. I despise this stock right now because I was in this thing at 750, sold it at 50 and 80, thought I was a champ to watch it go to 400. I want to beat the living crap out of this thing today. But now that it's made its move to the upside, the easy money on the long has been made. So now if it rolls over, I'm going to be shorting probably 332, looking for the 328 retrace. And if that breaks, those levels where it pivoted this morning are where I'm going to be looking to cover. Hopefully, again, I'm not going near this stock short unless the perfect storm sets up, and it has to be below orange and possibly below blue because this thing has just defied all logic at this point, going to 400 and change. But definitely looking at it as a short. And, going back to the Qs, if Carvana sustains this little, attempt to, reverse to the upside, it's a good sign for the Qs because we're losing leadership. And it's just a matter of time where I think we're going to give way on the Qs. But like I said, it's very difficult to stay short. But, again, you could trade it short, but just remember, it's a short-lived trade. You're getting 7 minutes, and that's all you really need.
Kenny, what time was the class on Saturday? It's at noon, right? Noon.
Yeah, we're going to be doing this 12 o'clock and, at least 2 hours. Sometimes I'll go 3. Sometimes I just can't stop talking. But if you guys want a prelude to the class, come tonight to the schmooze. I actually have a cryptocurrency hedge fund trader coming on. The only guy I like sorry, I don't want to insult anybody, but I love this guy. And he went from equities to only crypto right now. And I just want to have a conversation with this guy and hear what he's thinking now. So it should be a cool conversation. Really nice guy, big deadhead. So welcome my friend Lenny. And should be a good schmooze. And then we'll talk about some options. And last week was just absolutely insane. We had the options on the rig, the Cisco, and the Coinbase. And those were all 10 baggers. So it's good to prepare. This market is relentlessly paying you. And it's just a little preparation meets that opportunity, and boom, that creates your own luck.
All right, if you want to be at Kenny's class on Saturday, if you use the link that's on the screen, you will also get a free month. Actually, it's like a month and a half.
Yeah, we're doing it the opposite, friends. Yeah, usually it's you buy the month, you get the class. Now it's just buy the class. I'll give you a month of my time. You'll get to know what we're doing. And I'm telling you, the more you prepare for these earnings reports, you'll start to see it crystal clear. So if you've been debating whether or not to join us, this is your moment. This is the cheapest anything's ever going to be from us. $249. You're getting basically 6 weeks and a class and a couple of schmoozes to boot. And if you're lucky, I'll give you some double dark chocolate Milano cookies. What's up?
Okay, so this offer will end. The class is Saturday, so the offer will end on Saturday morning before the class. Use the link on the screen if you want to be at the schmooze tonight. Just email us. Email us up on the screen. And Kenny will give you the password to get into the schmooze. So
right on.
Tonight. All right. See you there, Kenny.
All right. Good luck, you Walmarters. See ya.
Good. And on that note, let's talk about Walmart because we've got Jeff Mackey in the house, and this is like his Super Bowl. It's 4 times. He gets 4 Super Bowls a year. He's a very lucky man. Walmart earnings are out this morning. I'm not even going to talk about it because I have Jeff. So let's bring Jeff out. He was on the call. He knows what they said. Let's find out.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Yo.
Maggie.
What's up, boys?
Hey.
How we doing today?
Happy Walmart Day.
Let me just preface with something. Folks, if you're listening out there, Jeff Mackey is the man when it comes to the consumer and understanding what humans are buying and what they're not buying and how that changes and evolves.
You make a tough but fair point.
Not just good looking, smart too. And he has told me time and time again that if he was stuck on a deserted island and had one piece of data to tell him the state of the consumer, this is it. Okay? He doesn't have to tell me that. It could be anything. I don't know anything about this stuff. I mean, I've learned a thing or two from Jeff, but this is the guy that I come to for this information. And he tells me this is the most important data point out there. Why?
Damn straight, because it tells me what consumers are doing, JC. You get the data, you get the consumer sentiment, you get jobs, you get this and that, and everyone likes to project it and talk about how it correlates with this. Shut up. Just everyone needs to shut up. It's you know what Walmart showed me? It showed me if you make a better offer, better product for people over and over again, they're going to show up and they're going to spend money. The consumer is not that bad off. The economy is just fine, thank you, because Walmart's cranking out earnings. By the way, I don't mind to bore you with fundamentals. CapEx this year for them, $30 billion. That's 1/10 of what Amazon's spending. They grew their online sales grew 27%. That's ridiculous. 27%, you make a tiny bit of profit. You know what? Is it sexy? Maybe not. But as I've said before, I find making money sexy. And what these guys do is just grind out about 4 cents for every dollar you spend there. And at the scale they're doing it, $170 billion. Well, that adds up online. And so they're just it was a really nice quarter, really solid. People looking for a buyback in the stock. You want to lose money in the market? Short stuff because it has a high PE ratio.
Yeah, that's
holy
a great
crap,
way
I
to lose
spent the
money.
last year listening to people tell me how the PE ratio on Walmart's too high and therefore we're doomed. Absolute no catalyst, just a way to kind of fill air. You can go talk to Ray Dalio about your high PE ratios and the collapse of the earth that's coming really soon. And I'll meet you on the other side of the trade.
Jeff, imagine complaining that a home run is too high.
Yeah, right.
Too high.
Right. It's
Too
just
high.
yeah, it's gonna get caught. It's too high.
Too
It's
high.
gonna hurt someone's hand when it falls.
Let me ask you this. When you think about Walmart crushing it, are you thinking about more of like, hey, I should buy some here? Or are you thinking of more like any of these idiots talking about the consumer's dead that don't know what they're talking about? Walmart's telling us the consumer's just fine. Thank you very much. Or is it both? Like, how do you think about this?
It's a little bit of both. Walmart, you should own it already. It's the classic kind of never lets you in or hasn't let you in anyway for the last year or so. Let you in for a while for the last 2 years, but they spend their money smart. It's not about how much they're spending. It's that they're putting the money to work right. There's a whole big AI re-rate going on for the entire retail industry. They're going to make more money. The margins are going to go just a tiny bit higher for the best players, the guys who know how to deploy their capital. Walmart is really good at that. They're a super smart group of guys down in Bentonville. People just have underestimated them as hicks for the last freaking 50 years. And all those hicks have done is kick the living crap out of everyone who dare oppose them. I'd like the cut of that jib, man. That is what I'd like to see. They're end users of capital. You know how many rockets they're launching this quarter? None. They're not gonna launch a rocket. They're not starting a satellite system. That's just not, an autonomous taxi service. No, they're not gonna do that. But they can deliver groceries in less than 2 hours to 95% of the country. And to me, that's a lot more impressive than a rocket launch.
Not bad, Mackie.
I don't understand anything about a rocket launch, but man, that sounds really amazing to get 95% of the country eaten in less than 2 hours.
Oh, it's so good. Let me ask you this. So, Mackie, I was at a like investing club meeting yesterday. I've never been to one of these before, but like I hear about them, right? Like usually, like the investing clubs I'm a part of are like hanging out with people like you and like right.
Yeah, the same group of idiots. We go have steak and it's an investing club.
Just more time to make all these mistakes, right? Is really what it is. Yeah. No, but so I'm sitting there, retail investors, a few financial advisors, and the arguments that they were making is like, people can't afford anything anymore. The young kids, they can't afford to buy a home. Like I remember I put 20% down and, I bought it for nothing in the 80s or the 70s or whatever. Like the kids these days, they can't afford it. So like there's the argument, like they're making sound, they're like, oh, I try to put an addition to the house, the cost of these things and the material. So like people talk about how the consumer can't afford things. And, I see it too, like, living in society, not everybody can afford everything. But then you have other data points suggesting that money is just sloshing around everywhere and there is more liquidity than we've ever seen before. Like how do you think about those two angles? Because these are both very valid arguments that people are making. Like where's the balance there?
Which loops me back right to where I walked in. That's another reason that Walmart is just such a great place to start for what you're kind of talking to, what you're speaking to. They gained share in apparel. Again, so young people can't afford anything. Well, if only we had some data point on what sort of low income people are buying. Well, they're buying shirts. You don't go out and buy shirts if you can't afford anything. Is there a K-shaped economy or whatever the hell the economists want to call it, propeller heads? That's fine, of course. The haves have a lot, and the have-nots are taken on the chin. That's for sure. You're seeing that in sort of mid-range dining. you're seeing a collapse there. So McDonald's is doing really well. They're taking share from kind of the mid-end stuff. And a real bifurcation between that and the high end. I was just in New York last weekend with my kids. I mean, it's also a luxury kind of complaint. It's a little bit of a fancy bitch to be like, no one can afford this. Geez, it was really expensive for me to fly first class out to New York, and it probably should be. And I couldn't have afforded that 35 years ago, but that's fine. That's kind of the way society always works. So the stuff they can buy, it's shifting, but there's also more offerings than other. This is it's a really good golden age out there, man. It's not bad.
Yeah, and what about it's interesting. It's really a golden age and not bad. Yeah, I would say on a net basis, that's my experiences in IRL. Also, let me ask you this: what about you talk about like what people who can't afford anything, quote unquote, where they're spending their money. You're saying that in apparel, they're gaining market share. What about like in the upper, as you go upper class, right? And people who do have money still choosing to shop at Walmart, right? Like I'm not a billionaire, but we're not broke either. My wife is shopping at Walmart. We're members of Sam's Club. We're not Costco or BJ's, it's Sam's Club. And that's Walmart. And my wife, I see Walmart packages coming in. And I was like, who's ordering this stuff? Why are you using Walmart? Not that I care, but because I hang out with you, I'm curious. Why are you choosing Walmart?
You know what? And
they deliver faster is her answer.
Because they're good. Because they're good at it is what's happened there. They deliver the same type of groceries. They're getting a ton of grocery delivery, and they're doing it fast. And so you know what? Consumers are pretty good that way. Your wife is savvy. Everyone else is. One of the answers to this affordability crisis is agenic shopping, they call it, which is a fancy word for just going online and finding stuff cheap. That's never been easier. That wasn't the thing when you and I were even young. You were younger more recently than me.
My wife doesn't love going to Walmart though. She says there's creepy people in there.
Yeah, and she's not necessarily wrong. But Walmart, again, that's probably why online sales grew 27%. They're revamping their entire store base, but that's still going to be the go-to place. They're kind of America's retailer. And
online, they're crushing.
They're crushing. And so they're offering, you don't have to go to the store. You don't have to, they're agenic shopping. They get about 50% of the people that use the Walmart app. I'm not a Walmart app user all that frequently. I'm a man of the people who like to go to the stores, but they're interacting with their online shopping agents. Those people buy more stuff and they find it at a better price. And so while things are getting expensive, inflation is absolutely a thing. The best kind of tool we've had to fight inflation has been the birth of online in general. We saw that in the first wave when the .coms came out, and all of a sudden you could buy from every store on earth and compare prices. Now you have it in agenic shopping where it's like, find me the cheapest. I need steak. I want to buy a bunch of meat. I want to buy some hamburger for the party. You can complain and the one-off visits that people put on their social media and say, oh my God, I spent $50 for a pound of hamburger. Fine. Shop better. Do better, be smarter. Like it's just not a thing that prices are going higher across the board. It's a competitive world out there, and it's never been more competitive price-wise or in terms of quality. And that's what you're seeing. Walmart's growing online much faster than Amazon is. Just as a retail entity, Walmart is taking a ton of share.
Are they starting from a lower place?
They're starting. Well, they're starting. They're starting. They've got about 170 billion. So yeah, they are, but they're also the second biggest.
Versus what?
Versus Amazon. 500, give or take, for Amazon online. And
Amazon a little bit more than double what Walmart does.
Yep. And so you're going to see, there's a lot of large numbers coming in. Walmart's actually also doing something kind of interesting where a lot of those sales are third party. That's where you get all that kind of mishmash crap from Amazon. That's like, I'm buying from, a Chinese vitamin company. I just want my creatine. What the hell are you doing? It's Walmart has a little higher bar in terms of their third party.
Maggie?
Oh yeah. Have
you been doing that for a while?
Yeah, it's a thing. It's a thing. I mean, it
helps
me sleep actually.
It helps you sleep?
Yeah, I take it at night. It's good. And also and it was actually recommended to me by a person that was involved with trying to help me sleep better, which is weird because I was like, I don't really need creatine. I'm not doing that much oiling up and flexing at the beach at my age. But I work out a ton. It helps with cramping and just kind of builds the muscle. But if I'm buying that on Amazon, to return to the point, it's who knows who I'm buying it from. Walmart is a little more selective in terms of how they're building out their marketplace, so it's a little less of that flea market vibe. that you get, which kind of is been Walmart's purview for a long time.
Especially for
So
something you're going to consume like that.
yeah, you're going to actually take it, and and so I want two things. I want it to be actually what it says on the bottle, and I don't want to accidentally subscribe to it and get it month after month.
Fair. Okay, so bringing this back to this report again, this is Jeff Mackey's Super Bowl, guys. This is his favorite of all of them, where he gets the most amount of information possible. Let me ask you this. What is it that surprised you the most out of this report that came out that maybe you didn't see coming?
It made a ton of sense. I mean, there wasn't a lot of surprises. I was surprised that they did as well as they did in apparel. Yeah. That was better because I'm only human. You read so many damn headlines about how freaking there's just discretionaries going straight to hell in a handbasket, and you start to believe it. That's the kind of thing that people usually buy in person. For Walmart to be taking share in fashion, that tells me Target has a lot of work to do. If you're looking for a stock that you can buy right now as a specky thing, I like Target more. I think they have more low-hanging fruit. But Walmart is just, it's hard to buy any stock that's being run by really smart people with a lot of resources. And again, they're not spending a ton of money to do it. So unlike the Mag 7, unlike a lot of these tech companies, Walmart's going to put $30 billion into CapEx. It's going to be the most they spend for the next 10 years probably. And it's going to redo all their stores. It's going to give them a better model. And from the supply chain to the customer, they're going to be more efficient, which means the margin goes higher. And if you're doing $700-something billion a year, and you take your margins from 3.1% net to 3.5, that actually takes care of your multiple problem pretty fast.
That Target, Mackie, I pointed this out to you before, but that low in 1990 in Target.
Yeah, 190 mean. Yeah. That looks like a pretty sexy little. 1990, like, as in like the year. My old man was
back in the early 90s when this thing bottomed out. You take that all the way to the top in 2021, right? So this is the October 1990 low, all the way to the high in 2021. The 61.8% retracement of that entire move is right around 105. And so we dipped below there and came right back. And now we're above there. So there's a trap there, I think. So to add, on a speculative trade, if you like Walmart, great. But if you want to speculate on some low-hanging fruit, on a mean reversion, Mackie likes Target. I think Mackie knows a little thing or two about Target. And I know a thing or two about charts. The 61.8% retracement of that entire move from 1990 up to 2021, right there at 105. We're above
and
that.
You know what? It's March 3rd. March 3rd is Investor Day for Target. And they're going to come out and they're going to announce their own spending plans. And they're going to take estimates way down because they have to, and they need a reset. But there's so much stuff they can do better and smarter and just more effectively that if you get 105, man, that's Christmas. If you can get a dip on the news that they're going to come out with on March 3rd, when I expect the estimates are going to come down, the numbers probably aren't going to be great. You got a new CEO coming in. Walmart did the same thing. If you're the new CEO, you underpromise. The first thing you do is you say, geez, I just hope to do half as well as my predecessor. And you kind of badmouth yourself. And then you go kick the crap out of those estimates. That's what they're going to do on March 3rd. Sometimes the street reacts really negatively. In the past, 2017, that's what they did. And it was a great buying opportunity then. That's kind of, history doesn't repeat, but it rhymes. And that's the rhythm that we got is I would love to see another pullback, one last kind of burst of these guys can't do anything, get the last hater on board, because it's a pretty crowded bandwagon of people who hate Target right now and think they're dead. Love it. Give me the other side of that all day.
Love it. Last question for you. Now that you live a beautiful lifestyle in California, beach, a lot of sun. You got a better tan than me. I'm the Cuban one. You're from Minnesota. This guy's got a better tan than me every day. When you come back to New York City, do you have a greater appreciation for New York considering how different it is where you live? Or is it like, I'm back, baby, like if I never left? Like, how does it make you feel?
I love it. I got a kid working there now. It's just grandpa old guy thing, just roaming around the financial district with my daughter, and she's kind of getting into banking. It's the best. It's New York has its ebbs and flows as well. I was kind of looking for the commie outbreak. I was looking for the whole place to have collapsed into this dystopian nightmare, and New York's doing fine.
That's over on Fifth Avenue by the Trump building on Fifth Avenue by the Tiffany's there. That's where all the shenanigans. Oh yeah, you'll find that there.
I went there. I went to flagship stores, man. Boots on the ground. That's where you go shopping if you want to.
Anything stand out from your Fifth Avenue experience?
Aritzia was amazing. Crushing.
Yeah. Where is it?
Crushing.
Where is it?
It's on Fifth Avenue. I don't know. I mean, it's asking me cross streets, but it's come on, man. It's right next to the Aloe, right down the street from the Lulu, and they also have them in Soho. They've got a new flagship.
It's on 49th. It's on 49th Street and Fifth Avenue.
There you go. And Soho is their other flagship, anything over 20,000 square feet. But you can walk into a store and you have just vibes at places and little touches, little things where, you know, the crowd's good, but it's not too good. You got men and women shopping there. They have this little cuck sofa area, I call it. I'm sure they don't call it that themselves internally, but just where all the husbands and the boyfriends kind of just hang out and they sit and, you know, you get Wi-Fi and it's just a bunch of men looking at their phones while their wives just go and spend a ton of money on achievable luxury. I just love a retailer that's kind of hitting it all.
Do you go to American Doll store?
I missed the American Doll store. There was a huge line outside of FAO Schwartz though, which was amazing. Mattel told me toys are dead. I wouldn't go. You know, it's
not even the original one. It's like a newer one. It's all fugazi, but they do have cool toys in there. But listen, next time you're in the city, go to American Girl Doll, right? And go downstairs and you have a Hot Wheels section, right?
Nice,
for the dudes.
Nice.
So like for the dads and like the little boys, like little brothers and shit like that, like the Hot Wheels section is sick. And it's underneath an American Girl Doll. Highly recommend. They got a whole wall of all the Hot Wheels. It is actually pretty cool. And I'll leave you with this. I learned this recently. Did you know that the creator of Barbie and the creator of Hot Wheels were husband and wife?
Really? I did not know that. That's outstanding. That's a nice bit of trivia. That's a talented couple. I bet they were just insufferable to hang out with, but it must have been amazing. And G.I. Joe and Barbie are completely unrelated. It's these little strange facts in the world of dolls and toys.
How about that? All right. Jeff Mackey, ladies and gentlemen. So 4 o'clock today, I'm going to be talking to Jeff Mackey about how AI is not just revolutionizing software and other things too. You're seeing that in retail. You're seeing that in the consumer. And with that comes winners and losers. And with that comes big winners and big losers. So know which ones. We're going to talk about it today at 4 o'clock. Click the link there to sign up. It's going to be awesome.
It's going to be huge. Best opportunity in years, man. I'm excited to talk about it.
Best opportunity since e-commerce?
I would say so. I would say so. Best opportunity for better and worse, man. If you're along the losers in this cycle, you are screwed, baby. But there's going to be huge winners, huge profits. So yeah, let's talk about it at 4. We'll see you then, Jesse.
Right. See you.
Looking forward to it, Jeff.
All right.
Slide 2.
Slide 2, and then Sean has a slide in here. So that's on slide 10.
Slide 2. Looking forward to 4 o'clock today. We're looking at Ruth Handler and Elliot Handler here, the creators of Barbie and Hot Wheels, husband and wife. Shout out to the Handler family.
I didn't know that. That's a fun that's a fun fact. Do you know the same guy? Oh crap! The guy that founded Atari, he had another business too, that was also wildly successful. But I forget it. Damn it! What is it? Someone try to help me out. He had the Atari guy after Atari.
Neil Bushnell?
Anyway, whatever. Let's bring on Sean and talk about whatever it is he wants to talk about, because that's what we do here.
Shawnee!
Wow, Spencer, that was quite an intro. We're going to talk about whatever Sean wants to talk about.
Yeah, because Sean, you're very philosophical. You're not like coming in here hot like, oh, we're buying fucking semiconductors. Like, that's never you. You're like, yeah. I'm like, you're like, yeah, I like it. I was like, are you putting anything on? You're like, oh, I put 3 trades on this morning. I'm like, well, why didn't you start with that? Right. So Sean is very philosophical in his thinking. And, you know, a man of, many thoughts and experiences. Good trades and losing trades, and Sean is on quite the hot streak here over the last year, killing it. So what do you got, Shawnee? How do we get better?
Well, I want to talk about this chart that our friend Grant shared today, and it just hit at the right time, the perfect time. I was a guest on a show yesterday, and the people were asking me, man, how are you making money right now? The indexes are going sideways. Like, what are you doing? And to me, I was kind of shocked by the question, because I was like, are you paying attention to what's going on in the market? There are a ton of stocks that are ripping. Yeah, the indexes might be going sideways. The S&P and the Qs and the IWM might be going sideways, but under the hood, once you get outside of the biggest cap names, there are some rippers. And so this chart landed in my inbox this morning, and I was like, this is perfect. This is exactly what I'm talking about. The average stock is up 6% so far this year, while the S&P is only up 0.6. If all you're watching is the S&P, yeah, you're probably bored. But man, I've got 120 positions on right now, all rippers. There's a lot going on, and this is not a boring tape at all. At all. I think Kenny would agree with me. The trading is great right now if you're willing to put in the work and get outside of, the headline numbers.
Yeah, I'm looking at let's see. I'm looking at the S&P 500 as we speak, and just a fun fact: the S&P 500 advanced decline line is at an all-time high, and over 200 stocks in the S&P 500 are up double digits this year. Over 200 stocks in the S&P 500 up double digits, and the median stock is up 7.1%. The median stock.
Right. So, for people telling you that this market is in trouble right here, or, it's going sideways, how can you make money in here? There's opportunity. You just got to look for it. And you don't have to look hard, right? I mean, my bread and butter trade, you guys know this. I love buying stocks that are making new highs, whether it's a 52-week high or an all-time high. And if that's all that you go by, if you just have a screener that finds 52-week highs, you're going to have plenty of stocks to choose from day in and day out, at least right now. That's been the case all year. And those things have continued to go on tears. Of course, this will come to an end at some point, but man, right now, there's a lot of opportunity in this market. And there's a lot of opportunity on the downside too. We've had some great short trades, right? PayPal was one of them that just absolutely crushed for us. Oracle, Salesforce, these have been great shorts. So there's opportunity in both directions here.
Sean, that was a great trade that you put on. You were really getting aggressively short when we were in Miami. You were there, we're having our conversations, we're talking strategy, and Sean's like adding to his software shorts. Nailed it. Remember that? I'm like, Sean, are you even paying attention? You're like, nope, shorting more software.
I do remember someone was trying to make the case for buying the dip in software, and I was looking at that chart saying, nope, I'm getting short here. And,
yep, nice trade. I didn't do anything. I wasn't long or short, but nice.
That's okay.
Nice. Yeah, whatever. You can't take every trade. There were easier trades. I was busy buying energy. Sorry. How do you feel about sort of the sector exposure that you have right now? So, technology at the large cap level has been getting hit, but you still have, these natural resource plays that have been doing really well. Healthcare hanging in there pretty good. Some of these stocks doing well, consumer staples. How do you think about the different types of stocks that are working for you relative to what was working before?
Yeah, the last couple of weeks, I've definitely shed a lot of, gold and silver miners, any kind of metals exposure. I still have some on, but a lot less than I did. I'm looking just at the top of my sheet now. The biggest winners tend to be in stocks like GlaxoSmithKline, J&J. Those are big. Coca-Cola are big winners for me. So those are names that you don't typically associate with big winners, right? You're usually thinking of semiconductors or AI stocks or robots or things like that. But man, I got Philip Morris, MO, CSX. These are not the names you think of, but hey, we don't care. All we do is we follow price. We talk about that all the time. The only thing that pays is price. And I'm buying stocks that are breaking out, and that's where the breakouts are happening in some of these old economy names. Fine, I don't care. I don't discriminate. I mean, JC, if you would have told me, 4 months ago that J&J would have been one of my biggest wins of the year, I would have told you you're crazy.
I did tell you that.
J&J?
I did. I
think you did. Yeah.
The day I bought it, I told you that.
And the thing's been trading like a meme stock. It's unbelievable.
Yeah.
Unbelievable.
That's what happens when stocks break out of basis and sectors are underperforming, and then they get rotated into. Those relative leaders tend to do exactly what Johnson & Johnson has just done.
Well, look, if you want to keep your life simple as a trader, if you're an active trader, if you want to keep your life simple, I know it's hard to sometimes track what sectors are turning and where's the next leadership going to come. You're trying to read the tea leaves. If you want to keep your life simple, just buy breakouts. They're not all going to work, but man, your biggest winners will come from that. And the big winners are what pays. And that's what makes it all worth it.
The big winners is what pays. And what's interesting is that Sean does a good job of like doing like a year in review and like going back. And I've done that over the years as well. And the one common theme in all the years is that, the Pareto principle, 5, 10 names, sometimes even less than that. Sometimes it's 3 names really made your whole year, right?
Absolutely. In the All-Star Options model portfolio, we did, I forget the number, but somewhere in the neighborhood of 150 trades last year. If you take out my top 5 winners, the performance is not all that impressive. It'd still be up, but it wouldn't be all that impressive. But you need those big winners. That makes the difference. And that's true whether you're a trader or you're a long-term investor, right? It doesn't matter what your time frame is. You need those big winners. That's where the money is. And okay, I could hear some people shouting in the background, oh, but I have a strategy that makes money 70% of the time. I'm hitting base hits all the time, or singles all the time, and I'm winning. Great. Good for you. That's awesome. That's hard work though, right? Coming up with a strategy that has a high win rate. They're out there, but man, that's a lot of hard work.
Not only, but what I've noticed in a lot of those cases, and it's not every case, but in a lot of those instances with a high win rate, you're taking an outlier risk out there that every now and then is going to come and bite you. It's going to take a big chunk out. So there's that element too to those types of strategies.
Absolutely.
Not all of them, but usually.
That's right. Hey, before we finish up here, JC, I know you're a Cuban, but I know that as a Pennsylvania guy now, you've been getting into minor league hockey. So I'm curious, you've been watching this Olympic hockey, man. It's been pretty epic.
I have not watched much of the Olympics, to be perfectly honest with you. I've been going to bed pretty early, having dinner with the fam. We've been doing a lot of movie nights with the family. As a matter of fact, we were watching the Mighty Ducks. We're about halfway through Mighty Ducks Part 2.
That's the best one. That's the best one of the trilogy. Everyone knows
that's the best one.
Well, Spencer's sweet spot.
Gordon Bombay's again douchey with the money, like like it's one of those kind of things. So like I haven't watched these movies in a million years. I don't even know if I watched all of Mighty Ducks 2. But I mean, they were good movies, and the kids like them. I mean, I have a 5-year-old and twin 3-year-olds, and they're actually paying attention.
All right, well, I'll give you the Cliff Notes version of the Olympic hockey. We had 4 quarterfinal games yesterday. These are the first elimination games of the tournament, and 3 of the 4 games were settled in overtime, including the U.S. game and the Canada game. Epic hockey. We were off to a great start. I can't wait for the semifinals tomorrow. Man, it's gonna be great.
But JC, in the Olympics, they do overtime is 3-on-3, so it's crazy. It's just
pretty cool.
Back and forth. There's so much room. It's very stressful.
That's pretty cool that they do that. I like that.
Yeah.
And then who's representing the U.S.? These are not NHL players.
Yes,
no, they are.
For the first time in I think 10 years.
12 years.
Do they take a break? Like, does this hockey season just stop for the Olympics?
Yeah, NHL's on a 2-week break right now, and it's great, man. All these NHL players, so the U.S. team and the Canada team.
The owners aren't worried that they're going to get hurt. Like, how does?
Oh no, they are. It's happened already.
Oh, it's the thing. Got it.
But I mean, this is great marketing for the NHL. I mean, you're seeing the greatest play. Oh yeah, the greatest players playing the best that they could play. It's
awesome. It's a net win for the NHL. You think?
Oh yeah.
Okay.
So JC, Friday tomorrow. I think 3:00, Team USA against Slovenia. Did I have that?
Tomorrow,
Slovakia.
3:00.
Slovakia. Sorry, Slovakia.
Tomorrow, 3:00. All right.
3:00. Yeah.
And I'll tell you, you guys gave me a little heat last week because I was wearing my Team Canada hat. I'm a fan of both teams. All right. I'll tell you what, as I've been watching this tournament, I've been liking the U.S. team more and more. I'll tell you that what are they? The Kachuk brothers, man, they bring a lot of grit, and they are nasty players, and they are fun to watch, man. Wow.
All right.
Strazza is asking when is the U.S. Canada. Strazza, we'll wake you up on Sunday because it'll be U.S. Canada on Sunday if they both win. So
that's so
what
fast.
Time?
I wouldn't say that's a guarantee.
I said if they both win.
What time?
I don't know. Probably 3:00. I have no idea.
Cool.
All right. Let's do a quick recess and then get out of here. And we got things to do. Trades to place. Money to make.
Shout out
Like I
Chuck
said-
E. Cheese. I went to Chuck E. Cheese for the first time in my life this weekend. It was lovely. Lovely.
You went to
experience.
Chuck E. Cheese?
He's got kids. Of course he did.
I didn't know they were still around.
Me neither.
Chuck E. Cheese. That's the Atari guy. That's what I was saying before.
Oh, I don't know.
Yeah,
Chucky showed up. He's dancing with the kids.
The
and video
guy that
games everywhere.
founded the guy that founded Atari later founded Chuck E. Cheese.
Wow.
Oh.
Yeah. Okay. Anyway, cool.
Well,
That's
my recess was the hockey. I sorry I jumped the gun on that.
That's
that
all
was
right.
my recess.
Oh yeah, thank you. Whoever mentioned Chris in the chat. Yeah, gold medal game for the women's hockey today. U.S. Canada.
Ooh, shout
today.
out to the ladies.
Oh, I'll watch that. That's the game in the women's hockey. I'm not shitting on the women, but in the women's hockey tournament, you got Team USA, Team Canada. They're great. The rest of the teams, sorry,
Yeah,
they're all
they suck.
pylons.
Yeah.
They're all pylons. They're just skating around them.
My recess was, I like looking at, days in history, like what happened on this day for the market and just in general. On this day, today was the unofficial death of the DVD. Toshiba recalled all their or stopped making DVDs on this day in 2008. They gave in to the Blu-ray. So RIP to the DVD. On this
They're not
day.
making DVDs anymore. Oh, that's surprising.
They make them, but they were like, we lost. The Blu-ray is the clear winner. So sad. DVDs were good. DVDs
Who even does Blu-ray anymore? I mean, everything's streaming now.
No one. Yeah, I know. Anyway, I just thought that was a
I missed the days ago, Friday nights driving over to the local Blockbuster and just wandering the aisles trying to find something to watch that night. I don't know. I miss those days.
I also missed Blockbuster. My Blockbuster was right next to Domino's Pizza. We would go get Domino's, go to Blockbuster. Oh, good times. Okay. A lot going on here on the network today. We have Steve Whitesell going live with $1 million question. Today, the $1 million question is your question, because today is a mailbag episode, the first mailbag app he's doing. So at 10 o'clock Eastern time, right here on the channel, Stephen Whitesell answering your questions about whatever the hell you asked him. So that's today at 10. Kenny Glick going live at 11. As he does every Thursday for the long and the short of it. Golden Wash going live at 2. Sean going live at 3 with the jam session. Jeff Mackey and JC going live at 4, talking about the next great opportunity in retail is AI. Louis going live at 9 today for Crypto After Dark. So a lot going on. We will see you here for all of it. Thank you for watching the morning show. Drop us a like. Go make some money. And we'll see you.
YOLO responsibly.
USA.
I can't take no loss. I don't even know what it costs.